Good morning, everybody, and good evening if you're joining us from the other part of the world. My name is Audrey Miskett. I manage data and insights on financial health for the United Nations Capital Development Fund, or UNCDF. Thank you very much for joining us today in our session entitled Saving Toward Financial Resilience. I'm very delighted to be part of this extraordinary panel of very distinguished panelists. So let me introduce the panelists first, and then I'll introduce the session, and we'll dive into a panel discussion. So this session is going to last 45 minutes. We're joined by first Ms. Hawati Abdul Hamid, a senior researcher for one of Malaysia's premier research institutes, Khazanah Research Institute, or KRI. Then we're joined by Ms. Lim Yam Po, who's the Chief Operating Officer at PIDM, a government agency that protects deposits and insurance benefits for Malaysians. We're also joined by Parul Khanna, who's the Director of PinBox Solutions, which is a digital micro pension solution that they're deploying in many parts of the world. And then by Francesca Chia, who's the co-founder of GoGet, a workforce technology platform that facilitates employment for Malaysians. They call them go-getters on their platform. Let's get started. So financial resilience, that's a very important and relevant topic, right, for the times that we're living in. So what really is financial resilience? Simply put, it is the capability of an individual or a community or a society to cope with a financial shock. And we're living in the midst of one that does not seem to end, a pandemic. So it's a person's ability to deal with the shock, to sustain themselves during the shock, and to recover from the shock when it's over. And savings has long been construed as a pathway toward financial resilience. What we're seeing in Malaysia, though, as we're seeing in different parts of the world, is something not very promising. So the Department of Statistics conducted a survey, and Ms. Hawati will speak to this soon, in Malaysia during the movement control order, or their term for a lockdown, during COVID-19. Of course, it's still going on. And what they found was that nobody is spared. More than 3/4 of government employees and individuals working for multinational companies indicated that they had only 4 months of savings left. And this survey was probably done in March or April 2020. But self-employed people and those that work for small private companies only had about 1 month to 2 months worth of savings left. And this indicates a big problem. So Ms. Hawati, I'm going to turn to you first. Malaysia is a middle income country, and it aspires to high income status in not so long from now. But Malaysia also grapples with a really low personal savings rate. And you've done a lot of research on household savings in Malaysia, household debt. What can you tell us from what has emerged from that research? What is the state of play when it comes to savings in Malaysia? And also, as you unpack that for us, could you also touch upon what are the barriers that people encounter to saving?
Thank you, Audrey, and thank you to UNCDF for inviting me for this festival. I'm so honored to be here. You are right in highlighting that Malaysian household saving is not that high, and actually the growth has weakened, at least when we compare to the period before GFC 2008. But it's also equally important to recognize that actually the saving in an absolute amount is still increasing, that it is not contracting. It's just the growth rate that is weakening. What does this mean is that some households can save and still have a strong saving. For example, recently Bank Negara in their half-yearly report noted that they observed that there's a surge in the retail investor buying listed shares, and they have bought for about 113 billion worth of shares. and these are not via borrowing. And of course, I would suppose that these would come from excess cash or saving that they have. But of course, we are not that concerned with this phenomenon. What we are concerned with is with those who are not able to save or have enough saving. And our own study actually have done a study in analyzing the socio-economic background of those who have not have enough saving. For example, we have seen stark differences between those in the lower income group compared to those in a higher income group, where when we see their residual saving, the difference between income and expenditure, which can be a proxy to saving, we see that bottom 20% just have about less than 100 ringgit excess income every month. And evidence from the saving that we saw from EPF, for example, is even more pessimistic, whereby we know that about 80% of our contributors, EPF contributors, would not be having enough saving when they retire, which means that later on when they retire, they may not be able to maintain the standard of living that they may enjoy during working life. And this is really worrying in terms of how they could smoothen their consumption when they retire. Another thing that it has been a bit of hoo-ha recently when EPF contributors are allowed to withdraw their saving, and then it has been revealed that about 32% of contributors just have about 1,000 ringgit in their account one, and this is something that what does it mean when even this is being allowed, and whether these initiatives are being well articulated when we want to roll this. And in terms of the reason why the saving rate is low, I think there are three reasons that I can highlight. For example, one is due to high debt level that our household are facing, and we have noted that there have been a spike in the household debt from 61% of GDP before GFC to 88% right now of GDP. And when we analyze what are the component of this debt comprise a lot of debt for mortgage or buying houses, and of course people can argue that this is a form of forced saving for wealth accumulation, but really the question is this is a form of illiquid asset, and when people are having financial shock, the question is really in terms of what are the more easily convertible wealth or saving that they can use to come in to assist their lives. And secondly, I think the reason for low saving is due to cost of living, and although in Malaysia we are in deflationary mode since March 2020, but low income, the kind of goods that they consume may not the cost may be still high, and we have seen changing in the consumption pattern over the decades, whereby a lot of items that used to be discretionary spending has becoming more necessity. For example, like data, telephone, ICT items, which put a pressure in terms of cost of living. And thirdly is due to the low interest rate environment that is facing, and people are struggling. Of course, the government want to promote consumption, and probably this would happen at the expense of saving. And those who would suffer are those people, as you mentioned, self-employed, elderly, when they are going to retire soon, later on, and of course, youth, who we are expecting about 300,000 youth coming into the labor market, and we are really in a dire situation in terms of our employment. And in terms of the barrier to save, I think one is really, even though I've been saying that low income is something that people struggle with, high cost of living, but I think financial literacy is something that need to be scaled up, even though people may have constraint, but educating people to actually save is something that have to be a lot of reaching out has to be done, particularly those in the urban, rural and remote area, and making all those financial products to be more easily understood. For example, insurance product can be quite sophisticated for some people in the rural area to understand, and making this making them available to in a more comprehensible approach will be much helpful. I think that's it for now.
No, thank you, Ms. Hawati. That was a very comprehensive overview of the state of play. And I liked how you gave us this big picture of what is going on in Malaysia, sort of the macro factors. But you also touched upon some micro factors that could be influencing why people are not saving, such as the fact that they don't understand products and there is a gap in financial literacy. You also indicated you touched on a few themes that I will turn to later on in this conversation. You talked about absolute savings, and when we talk about measurement, we'll get to that point. But I'm going to now turn it over to Ms. Poe. So Ms. Poe, you represent PIDM, and I'm a big fan of PIDM's work, how you promote savings as an instrument towards financial resilience. And you do a lot of research yourself. So it would be great to hear if you have some findings to share. But most importantly, I have two questions for you. One, could you give us a little bit of a value statement? Why do you think savings is important for financial resilience? One, and what kinds of savings should we be promoting for low-income people in particular? So Ms. Hawati talked about, retirement. She talked about also precautionary savings, but then there's also saving towards asset purchase. So there's different categories of savings. So when it comes to financial resilience for low-income people, what kind of savings should we be promoting? Should we be thinking about very seriously? Ms. Poe, would you unmute yourself?
So sorry. Thank you, Audrey. And thank you for inviting us to speak at this session. I think, as you said, it's a very topical issue given the circumstances that we find ourselves in today. So first, I will touch a little bit about financial literacy, Audrey, since we are involved in this area. As you know, as we've been speaking about, Malaysians generally perform at quite the low end of the financial literacy scale. So this has been recognized, actually. The Financial Education Network, it's a network comprising of some of the public sector bodies, SC, the Bank Negara, AKPK, EPF, PNB, and the Ministry of Education and Ministry of Higher Education. They're all members of this network. So they came up with a national strategy on financial literacy in 2019. So on our part, as a member of this, we have commissioned a couple of studies, actually mostly this year. One is the study on the landscape of financial education in Malaysia. And the reason why we did the study is because we want to know who are the key actors, what are the targeted demographics, what type of programs are out there, what are the gaps, right? So the study is really aimed at discussing how we can come up with better solutions, what are the gaps, right? And look for greater synergies with collaboration with others, not just within the financial education network, but the financial industry, the social sector, and so on. The other study that I mentioned is a behavioral study, one on financial resilience, savings actually. But I won't talk so much about that now because that's really a study that's ongoing. So just let me touch on some of the things that we found from the landscape study. And I'll go quickly through it because I think what it does is validates the issues that the Financial Education Network actually have already seen, but it accentuates what the gaps are. So in fact, there are quite a few programs, tools, and education material out there. Financial industry also puts out quite a bit of material. So the question we want to ask is, why is it, what's not working? There's so much out there. Why isn't it working? I think the key gaps that we're seeing is that there is a concentration of these programs on youth and children. And as you say, there's a gap in reaching out to the low income and vulnerable groups. Some of the key barriers we find for those groups are information asymmetry. They don't get reached as much. They have lower education levels, obviously lower income levels, and digital illiteracy. So that is also an issue. On the whole, we find that Malaysians also, may not seek information on or seek more knowledge about how to manage their finances, although there are pockets of Malaysians who are now more interested. We also found that we need to evaluate the effectiveness of interventions. So many things are out there, but how effective are they in changing behavior? And that's something we want to wrap our heads around. So if I were to sum up again in terms of what we found, there are many actors, there are a lot of programs, there's a swath of tools, there's a lot of material, but the material from the financial industry tends to be product specific, too technical, and the success of these programs are not generally evaluated. Even for the more generic material, it seems people don't really know where to look. And on the whole, there are psychological barriers to learning about how to better manage finances. So in particular, for the lower income groups and the vulnerable sectors, the industry generally don't target them, I think. And more needs to be done there. And there are educational barriers other than psychological barriers. So I'll come to that psychological barriers in a moment. What's going to happen going forward is that we're going to take the study and have more discussions with FEN and talk about what approaches or what the gaps are that we can address and who we can find to work with us to do that. So turning to your question, you mentioned that PIDM has focused on savings and, we think that it's an important pathway to financial resilience. And yes, that's very much so. As a deposit insurer, you might not be surprised that we are in fact advocates of emergency savings for contingencies. COVID-19, I think it's a clarion call to everyone. We all need emergency buffers in many respects. It's not just, it's not just individuals, but governments and institutions. Many are seeing that, that's an essential issue in these times, right? So as mentioned earlier, recent surveys also show a Ringgit Plus did a survey in 2020, and our Malaysians' habits haven't really improved. For the low-income group, that's not really a very good situation at all because they have financial constraints to start off with. So in terms of thinking, I think they may not be thinking so much about the future simply because they can only cope with present. And if there are unexpected events that hit us and they don't have buffers, that makes them even less able to cope. That's what we are finding. And that studies, if you look around the world, there are also studies that show that buffers do help. They lessen the likelihood of people falling into hardship. Makes sense because then they don't have to take more debt, they don't get mired in more concerns and worries that clutter how they think about going forward. So I think in a nutshell, we think that savings is important because it helps households keep control. if they better control the money, they're better able to tide over unexpected events. They have fewer worries. And actually some recent studies, and I like the title of the studies, in the US actually, by BlackRock's Emergency Savings Initiatives. It's called the Life Jacket in Rough Seas. So what they did was they're following people over COVID, right? People who struggle with volatile incomes, and they found, and they did it digitally, so they were able to track them very closely. And they found that those who had emergency savings before they went into the COVID situation, they were actually better prepared for extreme volatility in income. And the other thing that they found also, that people who already had a savings habit before COVID, those people were better able to weather the impact and continue persevering. So that's, one of the key reasons why we think that emergency savings is really quite important. And coming to that, the question that you asked, what types of savings we think is important to promote, especially for low income, for the reasons above, where, as I mentioned, I think emergency savings is highly important. That they'll help households recover better, essentially. They don't have to borrow, they don't accumulate more debt, they don't get more worries, they don't postpone bills, they don't eat into other savings that might help them, do things that they need to generate income in the future. So in some, I think the idea is, if people get used to the idea of savings and they internalize that as a habit, that is more sustainable because it helps serve them better in the future. So having said that, I think I would caveat, it's not just emergency savings. I think depending on individual circumstances, they will also need to think about what else they need to save for, what other tools can help them. Those who have uneven income streams, they would need to think about consumption smoothing. If they need to invest in more learning or more assets to generate more income, that's another area, the savings, they need to keep some savings. So really, I think depending on their circumstances, there needs to be a bigger mix of financial products for different income earners. But certainly building rainy day savings, we think it's highly important and something we need to wrap our heads around. So that's it for me. Yeah.
Yes, no, thank you very much, Ms. Po. I think you brought up very interesting themes. I will say that the point that you made about people having emergency savings and a habit of savings before COVID struck, being able to then deal with a financial shock such as COVID more comfortably, is very resonant with some of the research that UNCDF has also done with gig workers in Malaysia, and GoGet was a participant in our research study, and it also resonates with research done around the world. And what really emerges from this is that people with a habit of savings are able to weather financial shocks. So it's not just about the amount of savings, it's also about the self-efficacy that is demonstrated by this habit of savings. So there's a lot going on there. Another interesting thing that I think you brought up was behavioral sort of biases that all of us are prone to, including us on the panel, right? You talked about present biased preferences, how we are focused on the present more than the future that's quite far away. And for people that are in precarious situations with volatile incomes, present biasedness is even more pronounced. So with that, I would like to turn over to our next two panelists. We're going to pivot a little bit. We heard from a researcher. We heard from someone that works for government. Now we're going to pivot to the private sector or the social sector. Parul, you lead PinBox Solutions, which is Singapore-based, but you've also deployed your solution in different parts of the world. Rwanda is one of them. India is another. And you look at micro pensions for retirement. So it's a different category of savings. and you focus on the vulnerable people, particularly unsalaried workers. So it'll be very interesting to hear from you on what your product is about. And more importantly, it would be interesting to dive into what's worked for you and what hasn't worked in terms of deployment of this product and uptake from your customers, your potential customers. So over to you, Parul.
Thank you so much. I think I just want to take a leaf of what Hava and Po said, is that the problem of not having adequate savings is really the same across all developing countries, wherever we have worked, across Asia, Africa, and Latin America. There are about 80% of population in each of these countries who work for themselves, and hence are not going to have any formal social security net that other people enjoy, which is actually a huge problem, because by 2050, what Hava referred to is that about 80% of all savers in these countries are going to be informal sector workers who will not have adequate savings to sustain a life after retirement, if they have a magic word of retirement age. And I think a few of the problems, before I come to the solutions that we've had, I think a few of the problems is also that a lot of the economies, when we want to serve this income segment, have heavily dependent on the agent model, which is very, very expensive on the ground, and hence, the manufacturers of the financial products, if I may say, depend heavily on this agent network, because that's how traditionally it has been sold. But there is not adequate incentive for the agent at the front end to be selling this product, which is, sort of the monies that are being saved are small ticket size, and hence they rather sell another product to someone who's going to save more. Hence they give them better, revenues out of their livelihood of being an agent. So it's really not worked at that level. So the manufacturers depend on agents, and the agents are not really interested. So it just becomes like a vicious circle that goes on. A lot of the other problems are around friction on KYCs and processes. For instance, India is one country which is multilingual. So the baseline is that English is going to be the way your forms are going to be filled, but whoever is filling the form may not be as literate in English, and so how do you circumvent that problem is a huge challenge. There's also this, how do you enable an environment where a person can save $1 a day if they want to, given their income? So a farmer will have his income twice a year. A gig worker will probably be earning every day. There'll be people who get monthly as well. So the periodicity of their contribution, the products also have to be designed to be, and the environment needs to be created where the low-income worker or the informal sector worker is able to save according to their own periodicity. The third is what I resonate very well with what Paul mentioned earlier, is that people have different needs, and hence savings needs are also different of people. So we work in a space which is giving, we want people to save for the long term, but unless their interim needs are not taken care of, they will never be able to save for the long term. And when I say interim needs, they want to put, a roof on a new roof on their head, buy a new cow, children's education, marriage, all the usual issues. But one of the other things is also that a lot of people are underinsured. The reason that is, so if I give you an example, supposing there is the person loses a cow and he has to go and purchase a cow. He's probably taking out money from some piggy bank in the house, or taking up savings that he's already saved up till that point. And even if that's not enough, they go and take a loan at a very high interest. So what this does is they have not only consumed their current savings, but they've also mortgaged their future income, which then gets them into a cycle, which is very difficult for them to get out of. But if they had, say, a cattle insurance, then they would have probably been able to tide this much easier at a much lesser cost. hence giving them enough monies out of their own savings, which will then be used for current consumption, and really hope that it will then be used for future consumption and savings as well. So bundling of products is one thing that is very, very important for this to be taken through. The other thing is that approaches on how we reach out to these people. I think one of the ways to better do it is through looking at occupations, right? So if you tell a gig worker, there are pensions or there are savings products, they may not resonate that well. But if I say that this is a financial product for gig workers, this is for domestic health, this is for farmers, you are hearing and bracketing and projecting and giving them products which are suited to their needs. You're giving them to, you're catering to an income group that is suited for themselves. And I think the underlying thing which I would say to all of these problems and solutions is that technology brings in a lot of, reducing costs, less friction. Can we use daily apps like WhatsApp that people use, where they don't need to find themselves to be literate to something else in terms of customization, UI and UX. Financial literacy being the underlying thing for everything, whether it is getting people to get better, robust KYCs for themselves, having better payment mechanisms, servicing if they want to change their address, they want to withdraw their money, add a nominee. How do you give them services the way you and I receive? I think the trick is, and I think the FMCG sector has got it just right. They sell the shampoo to you and I in a big bottle, and they sell the smaller sachet of the same product to somebody in the rural setting, but the quality of the product inside is just the same. So I see no reason why financial products cannot be delivered through the same channel, where the quality, the design, the marketing, the communication, the literacy, the pricing, the servicing is all the same, but it is just for a different target audience. And let's not forget women here. We are an all women panel here. And I think it's very important that financial services be given adequately to a woman. As they say, you educate a woman, you educate the entire village. She's going to uplift her children and generations to come. Savings habits are best seen with women. They think of their household first before they think of anyone else. They want to save their monies without being patronizing, but a man may be more interested in having a liquid lunch, while the woman may be interested in saving for the future of her family. So we need to invest in women. We need to stay relevant to their needs. Trust is a huge issue. Being literate does not mean that you're financially literate. You need to have bite-sized products, bite-sized consumption for these women, so that they can go out and go out and get products that they are comfortable with. We've had experiences where I actually have to say this. We've had experiences where, like you said, before the pandemic, where women have saved better. They have continued to save, because I think what we are missing out is that today, because of the pandemic, the consumption on, if I may quote, frivolous expensive or aspirational expenses is now more streamlined. You don't need to explain to people why savings is important. But while that has happened, we need to give them avenues to save better. The huge exodus of migratory laborers from urban settings to rural settings during the pandemic is because they've not had adequate savings or adequate products or access to these products, which needs to be given. And I think, if I may, before I go on any further, I think the existing channels need to be leveraged. All of the countries, all of the nations have microfinance institutes. They have NGOs who are working on community-based organizations. There are gig workers who are aggregating demand. There are all of these existing channels that need to be leveraged to reach to that person, to give the right product, the right service, the right kind of education, and of course, and technology at the back end being a glue to bring this together.
Well, thank you so much, Parul. This panel is so interesting because everybody is bringing up so many different themes. I love that you touched on gender. I also loved the FMCG analogy. And for those of us who do not know what FMCG stands for, it's an acronym for fast-moving consumer goods. And the shampoo sachet example is lovely. So I completely agree with you that bite-sized, on-demand products that are more relevant for low-income workers, especially workers that are in the gig economy. And we're going to turn to Francesca next, who runs a gig platform, and she will be able to give us more insight into that. But I liked how you touched on periodicity and how to make these products more relevant for gig workers, right? Because the way things stand now, really the bedrock of savings products or insurance products, they rest on the notion that everybody is earning a stable income, which is not the case. And so we need to turn that around. So Francesca, over to you. You run a workforce technology platform that is absolutely loved by your go-getters. I've conducted some interviews with go-getters. I've been to your office. There's just a lot of promise there, right? And you run also, or rather you offer a few products on your platform that are savings related for your go-getters. So could you tell us a little bit about those products? But another question I'd like to ask you also is you run surveys yourself on your platform for go-getters related to savings. So what has emerged from those surveys? I did hear from some of my colleagues that you ran a survey in 2019, you did one in 2020, and you noticed an evolution there in terms of go-getters' aspirations for savings. So if you could tell us something about that, I think that would be great.
Sure. Thanks so much. I think what's really great is that what I'm about to share kind of pulls together what the previous speakers have completely just described as well. We started off with the research on how the nation's statistics are poor or are not as positive compared to other competing nations. And then we even have, the government point of view and their incentives to make sure that they are building a healthier nation and a more resilient nation. And then it was really great to also hear on the social aspect about how we have to really drive a more relevant solution when we give it to individuals such as gig workers so that it actually is useful. So really, from my perspective, I am actually ultimately that kind of ears and eyes on the ground for all of what has just been said. Essentially what we are that platform that creates flexible, on-demand, short, bite-sized jobs for people, which means that they're able to earn through this platform. And as low as it can be 10 ringgit for a job, it could be 15 ringgit for a job, and they're getting these individual payments into their go-getter platform. And so what we do is exactly as what the previous speaker has said. We have tried to make it on demand and bite-sized so that it is on a per transaction basis. So today, anyone on GoGet can save as low as 1 cent, actually, not even 1 ringgit, 1 cent, however much you want, to a saving goal, and you get rewarded. And we partner with a payer to do that. We also then integrate with an insurance on-demand player that allows our go-getters to buy insurance for less than a ringgit per day. And they could either buy two types of packages. One, which is, I would like to be insured only for 24 hours, or I would like to be insured for a full month. And so again, this allows us to slice and dice traditional financial products and make our less protected group of the nation more resilient by making those products more relevant and I guess digestible by them. So we've sliced it into much more of a micro transaction. And what we've seen is that exactly what the previous speakers have said, we also need to make sure we invest in the education of these products. Even though the creation and structuring of the products has happened on our platform, we need to also ensure that financial literacy and understanding of them is there. Otherwise, again, the awareness and the adoption doesn't take place. So what we do is we invest in creating communication plans and communication materials to these go-getters to actually communicate it in the format that is applicable for the go-getters. We communicate it in terms of telling them what happens if they get into an accident on a job. They usually would be having to go into their savings to pay for any emergency requirements. But with insurance, they don't, right? So we actually try to create infographics, information that shows them, hey, just a reminder, guys, this is what happens, and we try to make it so that it looks like we are in their shoes. The other aspect that we do is to actually hit them at the right location and time of the journey. What we mean by that is, if we notice someone has earned a significant amount, we actually auto hit them with saying, hey, did you remember to save? You've just earned another 10 ringgit. And it's really important to save. So it's right at that point, at that minute. So that's where that technology allows us to hit them when it's actually relevant. Similarly, for insurance, it's also, if we notice like, oh, this go-getter is going to be doing a really long job that will take 8 hours, that's a higher risk period. So we would actually ping them and say, hey, I noticed you're taking a long job. You really should get additional insurance for you to be protected. Right? And what's really exciting is that, especially with this year, with the COVID-19 pandemic, the government has been more aware of how important it is to protect the underprotected previously. And they've created Penjana Gig, which is a program that allows us to finally also offer a more relevant solution for EPF and SOCSO, which is obviously our government pension fund, and employment insurance for our go-getters. And so this is something that we're already executing. And today, now our go-getters can be just as insured as a normal full-time employment with SOCSO. But with Penjana Gig, they actually get SOCSO on demand as well, which is amazing, right? Which means, imagine now a gig worker, if he does get into an accident, touch wood, obviously, we don't like that to happen, but his children under 18 are covered. That is something that we are so grateful that the government is very open, and I think the Malaysian government should be actually a great example for many other governments around the world to do this, because this really helps us solidify gig work to be long-term, more sustainable. And ultimately, this is so important today and age because of the challenging time that everyone is faced with today. Businesses are finding it hard to hire full-time, but if they use a flexible model, they can still try to grow their business and offer the community. So how do we do that all and foster this growth for this post-pandemic situation, but ensure people are protected? So I think it's great that, we have to combine the research, we combine the government's initiative, and we combine technology and making the solutions relevant so that we can actually get onto the ground and execute. Because in the end, it's all about making sure that people are really getting more financially resilient. So that's I guess one thing. I think you did ask me about the surveys that we ran. So we do always keep really close in contact with our go-getters. Actually, not just through surveys, we actually hold community events. We meet up with them before COVID. Now with COVID, we do an online event where they can give us feedback, they can question. We actually spotlight our partners, our savings partners, our insurance partners, and we've brought EPF in, we've brought our insurance partners in, and the go-getters can ask questions directly to these partners so they can be answered. And that's so important so they can build trust. And in these surveys or in these touch points, go-getters have communicated that, savings usually is very much correlated to their ability to earn, of course, because it's a portion of what their income is going to be of. Many a times, unfortunately, in the B40 segment, they actually resort to borrowing from friends and family if they are short. We have found that a lot of people who do save, of course, they are a lot better at paying off bills. So these are some of the insights that we have seen on the ground that absolutely mirrors the same insights that the other speakers just said. I think what we've seen in terms of changes now since our survey is that we're seeing, and we hope to see more of, go-getters are more aware of financial products and also seeking to save for bigger goals. These are things that we can show like through really relevant partnership. We can make a difference. We can actually genuinely get onto the grassroots off where we need to make an impact and change mentality, educate people, and get more protection.
Thank you so much, Francesca. I liked how you explained the slice and dice approach, which definitely has to be contrasted with this cookie cutter approach, right? That the financial sector is so used to deploying without kind of really understanding the customers that they're dealing with on the other side. They treat everybody as a homogenous group. So I really liked how you pointed that out, and also how you talked about the customer journey and knowing when to intervene. I think that's a great way to enable choice for customers and nudge them towards a certain, intended direction. So that's great. We're coming up against time, and I had originally, planned to ask the speakers about, what we can do as a financial sector, but, things don't go according to plan always. And what's interesting is everybody has touched on that. So I'm going to probably use the next 2 to 3 minutes to pivot to a slightly different topic, which is really important, and which, the financial industry, but also researchers are sort of grappling with. And there's many camps, and that is to do with measurement. So I just want to throw the question out there to all speakers, and very brief responses from you guys, maybe 30 seconds to a minute. In your opinion, how do we know if someone's saving well? And let me just give you a little bit of context there. There is a camp that says that we need to look at savings balance, right? And I personally think that is, it gives a lot of insight. But also, when we talk about emergency savings, we need to realize that when people build up savings, it's because they need to withdraw it at some point. So the balance is not always going to be there. So there is another camp that talks about how we need to look at cash flows. Are people saving, withdrawing, but replenishing savings again? So there is this, debate going on. So how, to all the speakers, and feel free to chime in, in any order, how do you know if someone's saving well? Whoever wants to go first.
I think I'm happy to go first on this one. I think it's not, you mentioned two things, whether they're saving adequately or do they have a savings habit. And I think both of them are really the both sides of the same coin, because if you have a habit to save, can you keep going on and on? But if you don't get adequate returns, you will never be able to meet your short-term and long-term goals. And I think some part of this has also got to do with the ecosystem, that if somebody is saving small ticket sizes, what kind of returns can be given to them, which gives them the compounding can work in their favor, and also the rate of interest that is coming. I think government has a part to play in that, while the private sector, the government also has a part to play in creating public good for financial education, because that can be very expensive, and create that so that people have this savings habit that is inculcated. And I think the private sector also needs to come on giving them the right kind of products which will give them better returns, not make it very expensive where the delivery is very expensive and the returns are the service charges are so expensive that the savings get cannibalized. So I think it is both, and I think financial literacy is the underlying favorite thing that would be here.
Great, thank you. Ms. Hawati, as a researcher, what do you think are some of the best indicators for, to assess if someone's saving well?
Maybe I'll just be a bit unconventional here, and probably to just trigger our creativity. Probably, I think one thing, aside from all these conventional measures that we can see in terms of the level of people saving, probably another indicator that we can see is in terms of the pattern of people's consumption. Because I think if we can actually get a lot of insights from people consumption, that can actually allude to what are the trade-off that they are facing in their consumption, and then also point us to in terms of what are the residual income that they would have for their saving. That's a short answer from me.
No, I'm really happy you touched on the expenditure bit, because spending is related to saving, right? If you're going to spend more, you're going to save less. So there is that connection there. So I'm really happy you brought that out.
Yes, especially I think whether consumption, people with income and whether they are actually living within their means or they are spending due to lifestyle, just to keep up with lifestyle.
Well, thank you.
If I can just come in here, I think Hava brought in a very important point on lifestyle. And I think we have an approach where we have a program that is replicable, not a cookie cutter, but a replicable model that we have live in India, going live in India, already live in Kenya. If I can just request you to play the video, please.
Sure. This is Shanta. She's 22 years old. She lives in a little village far away with her husband and 3 children. But her family finds it tough to make ends meet. So Shanta decides to migrate to your city in search of work. You employ Shanta as your maid. She works long hours, she takes care of your children, she cooks your meals and keeps your house clean. She sends most of her income back home to support her family, to put food on their table, and to send her children to school so they may have a better life than hers. She does this year after year after year. When she's too old to work, Shanta returns home to her little village. Her children are now grown up. They're educated and married but have migrated to the cities. Shanta and her husband now live alone. But with no savings of their own, they struggle to make ends meet. They live without dignity and will live this way for the rest of their lives. But does it really have to be this way? Let's see this again. You employ Shanta as your maid. You talk to her about the importance of setting aside a small part of her income for her old age. Then you spend just 5 minutes on WhatsApp to help Shanta open her own pension account. And you get her started by regularly putting some money into this account for her old age. These savings will be managed by the likes of HDFC Pension and SBI AMC and will grow over the years. When she is too old to work, Shanta will return home to her little village. She and her husband will still live alone, but they won't struggle to make ends meet. Thanks to you, they will now get a monthly pension and will live with dignity for the rest of their lives. This could be the story of your maid, your driver, your gardener or guard. Just 5 minutes of your time can change 20 years of Shanta's life. You can be that change. Gift Shanta a pension account today. Her clock is already ticking.
I think this is one of the options that we have, a delivery mechanism where we are recognizing occupations, recognizing what they need, and also getting a civil society, private and public sector to be able to deliver something like this to the domestic market.
Oh, thank you, Parul. That was a very impressive video and a good way to probably end this really insightful discussion. We have a little bit of time, so I'm going to give every speaker about 30 seconds to just share some parting thoughts, any concluding remarks, if you want to. We can start with Francesca if you have any parting thoughts for our audience.
Sure. I think for me, coming from what I see on the ground, I would always say the individuals that unfortunately not served and very underserved today due to the current industry makeup and structure are one of the biggest contributors to our economy. And it is extremely frustrating to see if we don't rethink and be creative in our products, our services, in serving the underserved today. We truly won't make the true development requirements of our nation. So it is absolutely required for us to rethink how we can, as industry players, whether you're government researchers or whether we're NGOs, how do we champion for people to readjust the traditional industry makeup and rules, and make sure we're open mind. We keep an open mind to rethink, because what has worked in the past is clearly not serving everyone. And that is so important for us if we truly want to actually move into a more developed state of a nation. And all I will say is then all we have to do is just make sure we're really close and keep conversations with our end users, and make sure that is really like our ears are open and we are adjusting the products to what they need. It's actually quite simple, but we just need to do that. And people should know that they should be incentivized to do this. It is a great market, and it's a huge market for players to make sure they do build services for that.
Great. Yes.
So maybe I can just say my last word. I think it's really good that we are talking about saving and how we want people to live independently, free, have financial freedom and live in dignity. But I think at the same time, the role of the state in ensuring a strong social protection system, it should also be in place. And this should not only cover those who are not able to generate income, and we have to put a floor where we can actually protect our household to not fall below poverty, and apart from that, probably strengthening our health system, education system, and to make all these kind of public services universally accessible to everyone would be something that would ensure everyone are not left behind.
Great. Ms. Poe, any concluding remarks?
Yes, I think I'd really like to compliment the speakers just now, GoGetter, Parul, for coming up with such great ideas and products, and it's actually quite inspirational. I think that this environment gives us a lot of opportunities to leverage on the things that they said, technology, reaching out to people who have that need, tailoring solutions to that. One of the challenges, which I was talking with Hawati earlier on, though in our context also is really finding ways to, in the context of Malaysia, also to reach out to people who are not perhaps as digitally savvy, but given COVID situation, I think that's kind of forced more people to go on these channels, and also it gives us an opportunity to reach out to them with better products. So in some ways, I feel that this timing has given us a lot of opportunities for people to come up with more creative ways of giving people the products that they need. But also, I think that the timing is really quite good. Social psychology shows that periods of flux actually brings opportunities for people to break old habits and gain new ones. They say even in pandemic. So this is a great opportunity. It's great timing. I like the idea that you've brought together public sector and private sector, social sector together, so that we can work at ways of making sure that the interventions actually work, as opposed to flooding the market with, as you guys said, generic information that doesn't change behavior. So this is a really great panel. I hope discussions will continue. And I would also like to say that I'm really pleased that we've come across UNCDF and that you're prepared to work with us on some of this research, because there's a lot of learnings that we can take from your studies and your experience and expertise. So thank you very much.
Thank you. So we only have 2 minutes. So Parul, you have 1 minute if you want to make any concluding remarks.
Thank you so much. I'll be really quick. I think resonating with all what all panelists have said, I think social security inclusion is very important. In the market sizes across the world, if Rwanda has 6 million, India has 6 million in 5 square kilometers. Maybe the problem is only in the difference is only in the zeros, but I think the governments have a huge part to play, because the cost of giving social security 30 years from now to a larger population is nearly impossible. So to incentivize the youth and the young today for self-help and thrift, to co-contribute, to provide products, to create an environment is hugely important. And I think governments can play a huge part in doing that, along with creating financial literacy as a public good.
Thank you so much. It's been such a pleasure to moderate such a stellar panel. And thank you for bringing up so many interesting themes. And Parul and Francesca also for highlighting the challenges that you face on the ground. I know we talked a lot about barriers, but I think it's a good thing because we're looking in the right places so we can find solutions. Thank you everybody for joining us. Thank you to the audience for listening. And feel free to get in touch with us if you have any questions. So thank you once again. I hope you all have a good day.
Thank you so much.